Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Texas Pacific Land Corporation, ticker symbol TPL. We're looking at Texas Pacific Land Corp as a subscriber request today. So their stock price has performed amazingly over the past year. They're up 99%, almost exactly doubling. Currently, they're trading for $2,603.23 per share. Over 5 years, their stock price has compounded at a rate of 44.5% annually, which is just insane. The business is up more than 7 times from their March 2020 lows. Over 10 years, they're still compounding at a rate of 46.5% annually. And going back nearly 18 years prior to the global financial crisis, Texas Pacific Land Corp has compounded at a rate of 30% annually. So the business has been a 100-bagger over this time. It's done so well that its stock price is difficult to see here in pretty much any year leading up to about 2012 or so. So currently, Texas Pacific Land Corp is about $100 below their 52-week high. They're up well more than double from their 52-week low. About 3.5% of their shares outstanding are currently sold short, and they have about a $20 billion market cap. So for additional background about the company, Texas Pacific Land Corp is mainly engaged in sales and leases of land owned, retaining oil and gas royalties, and the overall management of the land owned. It operates its business in 2 segments, including land and resource management, and water service and operations. The land and resource management segment focuses on managing its oil and gas royalty interest and surface acreage located in 19 different counties. The water service and operations segment includes water sourcing, produced water gathering, treatment, recycling, infrastructure development, produced water disposal, water tracking, analytics, and well testing. So the company's land and resource management segment manages approximately 880,000 acres of land. This segment holds a 1/128th non-participating perpetual oil and gas royalty interest on approximately 85,000 acres of this land and a 1/16th perpetual oil and gas royalty of approximately 371,000 acres, with 4,000 additional net royalty acres in West Texas. Its operations are concentrated in the Permian Basin, and the Texas Pacific Land Corporation was founded in 1888 and is headquartered in Dallas, Texas. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Texas Pacific Land Corp based off of their business fundamentals. This analysis is still an evolving process. It will continue to improve and get better over time, and it's an opportunity to learn in public. So with that said, let's get right into today's analysis. So starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So there are 2 key reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital. So by asking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. Texas Pacific Land Corp blows these numbers out of the water. The lowest returns on capital that they had came in at 41% in 2020. They had a high of nearly 140% returns on capital in 2017. It's not surprising that they have such high returns on capital, and it's also not surprising how their returns on capital have fared over these years, as their returns are based off of that perpetual royalty on oil. Over their last 12 months, they've had a 74% return on capital, and averaged out over this period, Texas Pacific Land Corp is averaging about an 81% average return on capital. That is more than 11 times better than that of an average business, and this is a massive check to start off on metric number 1. Next up, for metric number 2, here we're taking a high-level overview of the growth of the business. So we're looking for revenues, earnings, and free cash flow growth over the last 5 years, and this metric is all or nothing in nature. Either all 3 of these numbers are going to be up for this to be a check, or if even one of them is down, this entire metric will be an X. Our calculations will also be using their last 12 months of worth of numbers, which aren't going to show up here. Over this time, we get to see the growth that the business has really experienced. So their revenues have more than quadrupled. Same thing with their earnings, and their free cash flows are up more than 5 times from where they were in 2017. This is massive, massive growth for a business like this, especially one that's been around as long as Texas Pacific Land Corp has been. This is another huge check on metric number 2. Next up, for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Texas Pacific Land Corporation on a per share basis. So we're looking for earnings per share growth over the last 5 years. As we learned in the previous metric, their earnings are up more than quadrupling over the last 5 years, and at the same time, they've kept their shares outstanding pretty much flat. They've repurchased about 1.5% of their shares, so this equates to very strong earnings per share growth, and this is another check here on metric number 3. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. Again, their free cash flows are up more than 5 times over this period, and with their shares outstanding pretty much flat. This again is very strong free cash flow per share growth. This is another check, and so far through our first 4 metrics, we are a perfect 4 checks and no X's. Next up, for metric number 5, here we're evaluating how the business is utilizing leverage. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor financial outcomes. So we want their net debt, which is their total debt minus their cash and short-term investments, to be below the amount of free cash flow that the business has produced over the past 5 years. Texas Pacific Land Corp ended 2021 with nearly $400 million worth of cash left over after paying off all of their debt. This has grown slightly, so currently they have about $450 million worth of cash left over after, again, paying off all of their debt. And over this time, they produced nearly $1 billion worth of free cash flows. This is a very strong balance sheet to have for such a cash flow generative business. And this is another big check on metric number 5. It looks like they're in a very strong financial position currently. Then finally, the big metric of them all, metric number 6, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the rate of the 10-year treasury yield and potentially give us another reason to be interested in the business. We're using their total enterprise value to give us a more accurate picture of the economic reality of the business by taking into account both their market cap and their net debt position. So this is going to be more similar to as if Texas Pacific Land Corp were a private company. So currently they have about a $19.6 billion total enterprise value. And as we learned over the last 5 years, they produced about $1 billion worth of free cash flow. So that means that in an average year, they're producing about $200 million worth of free cash flow. So when we divide their $200 million worth of their average free cash flows by their $19.6 billion total enterprise value, that only gives us an average free cash flow to enterprise value yield of about 1%. That's well below the yield of the 10-year treasury, and that's well below that 5% mark we're looking for. So unfortunately, coming in all the way at the end here, this is going to be our only X on Texas Pacific Land Corp today. Worth being aware of, though, is that over their last 12 months, they produced about $390 million of free cash flow. That's about double from where they've been at historically over this period. It would seem to be that Warren Buffett's thesis is that the price of oil and natural gas are going to stay materially higher going forward into the future than what they've been at. While Berkshire Hathaway is not invested in Texas Pacific Land Corp, that could potentially provide some indication of what their future cash flows are likely to do. So based off of their last 12 months of free cash flow, if they're able to maintain this going forward, a current free cash flow to enterprise value yield for the business is about 2%. So it's potentially likely that they'd have this higher increased free cash flows going forward as a more stable baseline into the future. Even still, both on an average and a current basis, this is coming in below that 5% mark we were looking for. And so again, this is our only X today on metric number 6. Then finally, here we're taking a look at Texas Pacific Land Corp's dividend profile. Currently, they're paying out a very modest 0.45% dividend yield. Over this time, their free cash flows have grown very strongly. They were paying out dividends prior to the COVID-19 global pandemic, although they cut their dividend payouts in 2020. Since then, as the price of oil has really rebounded, they've massively increased their dividends compared to where they had been at historically. However, they're still producing a ton of free cash flow to be able to very healthily and seemingly very easily support a high increased dividend going forward into the future. While this is a look at their past performance and it's no guarantee going forward, it would seem likely that they'd be able to continue paying out dividends pretty sustainably going forward. Then finally, here we're using a discounted cash flow model to come to a potential fair value for Texas Pacific Land Corp. So starting with their current free cash flows and then projecting those out into the future based off their historical abilities to grow their free cash flows dating back all the way to 1990. So over this time, they've grown their free cash flows at a rate of 18% annually. If we assume that that continues over the next 10 years, and then we use a terminal stage for the 10 years out after that, where their growth rate falls in half, and their free cash flows grow at a rate of 9% annually. If we add in their tangible book value today, and we are seeking a potential 10% rate of return from the business, then it looks like a fair value for the company would be about $1,800 per share. So from today's valuations, it looks like you could reasonably expect about a 6% rate of return going forward from Texas Pacific Land Corp, using those same historical growth assumptions, which you need to do your own due diligence on to determine whether or not those are going to be potentially accurate and applicable going forward to give us a baseline projected estimate for the business. Please keep in mind that a discounted cash flow model, just like any other model in any other discipline, is going to have its outputs be sensitive to its inputs. And please be aware that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. So in summary, Texas Pacific Land Corporation checks the box on 5 out of 6 of our metrics. The checks that they did have today were blowing these metrics out of the water. However, their only X came on metric number 6, where it looks like the quality of the business is being pretty well appreciated by the market, especially with their huge recent run-up where their stock price has doubled over the past year. So you could potentially expect more modest returns going forward into the future than how the company has fared recently. They have very strong returns on capital, averaging out at over 80%. Their revenues and earnings have quadrupled over the last 5 years, and their free cash flows are up more than 5 times. They've kept their shares outstanding pretty much flat with only very modest buybacks at best. So they've experienced very strong per share growth based off the overall growth of their business. Then they currently have about $450 million in cash after paying off all of their debt. They restarted paying their dividends after cutting them in 2020, and it looks like those are very easily supported by their current free cash flows. And then finally, performing a discounted cash flow analysis of the business using those historical growth assumptions dating back to 1990. So if you've done the work and you believe that those are accurate going forward, if you were seeking a 10% rate of return for the business, it looks like a potential fair value for the company is about $1,800 per share. And from today's prices, again using those same historical growth assumptions, you could reasonably expect about a 6% rate of return going forward for the business. So it's worth reiterating that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. It's up to you to do your own due diligence, and please consult with your financial advisor before making any investment decision. So as a value investor, you're ultimately trying to conduct deeper research about the business as if you're going to own 100% of the company, and you can understand the essence of the business and understand what's important and what's not important going forward for the company. So through your deeper research into Texas Pacific Land Corp, you'll be able to learn more about the qualitative and the quantitative aspects of the business, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for the company will be. So with that said, that's it for today's fundamental stock analysis of Texas Pacific Land Corporation, ticker symbol TPL. We looked at the business as a subscriber request and because they're one of the best performers over the last year. Again, Texas Pacific Land Corp has been a 100 bagger over the past nearly 18 years, despite being in business for more than 100 years. I'm happy to make an analysis of the business, so if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Texas Pacific Land Corp with me, and have a great day.